All right, welcome back for another episode here on the McHugh Insurance Group YouTube channel. Today's topic, I want to dig into another life insurance topic, talking about term insurance. We'll talk about that briefly, but more so I want to talk about what term conversions are or what convertibility means as it relates to term insurance policies. And I think this is extremely important for young generations to pay attention to because there's a handful of things to think about. We've talked about before, there's a million kinds of life insurance out there. There's 100 different ways to set it up, different types of policies that accomplish different things. But what most people are familiar with, what they're comfortable with usually, is term life insurance. And so when we talk about term life insurance and what it is at face value, it is life insurance that is in place for the specific term that you purchased it for. Okay, the most common of which being a 20-year term policy, which would be a term life insurance policy that is in effect for the 20 years after you purchase it. Okay, they also offer it in 10 years, 15 years, 25 years, and 30-year term increments. And all that means is that over that period of time, however long your term, if you pay your premiums, that death benefit will get paid out so long as if you pass away during the time of the term, okay? Now, with all of the different options that are out there for life insurance, when we talk about term insurance, it is without a doubt the number one most cost-effective type of life insurance you can buy. Now, the reason being is that the life insurance companies are taking a gamble, and a very good one at that. They're like Vegas, they don't lose, that you're going to buy a term policy and you're likely not going to pass away during that term, and they're just going to pocket all of the premiums that you paid to them. And after your term is up, you'll no longer have insurance and they'll no longer be on the hook for a death benefit. Now, I say that to say that term insurance isn't a bad way to spend your money or a bad way to purchase your insurance, because it does, in my opinion, provide the right kind of protection in certain scenarios. So, for example, if we talk about a business or even an individual who has a debt, and let's say you took out a 30-year mortgage, and at that same time you took out a 30-year term policy, and you're 25 years old, but by the time you turn 70, your mortgage is going to be paid off, and at that same time your life insurance policy would no longer be in place, but you wouldn't need it if the reason you purchased it was to cover the mortgage for your house if you passed away, okay? Now, where term life insurance can kind of lose its effectiveness is if you're buying it to pass on to the next generation or to your spouse down the road, generations down the road. When you pass away, maybe you're 70, 80, 90 years old, but you want to provide for your spouse so they can continue to live the same quality of life that they have been used to. Or if it's to provide for your children or loved ones after you pass away, that's where term insurance loses its ability to protect you in the right way, because if you outlive your term policy, you'll have nothing in place. And in fact, if you wanted to then wait 30 years, then take out another policy after that expired, well, then you'd be paying an exorbitant amount of money for that new policy, and it just wouldn't make sense. And if you could afford it, you probably wouldn't need it because you'd have enough money in the bank. But there is one very important piece of term insurance policies that everybody should know about. It is a certain component of the policy that is called your convertibility rider. It's called a number of different things. But what convertibility means as it relates to term life insurance is your ability to convert that term insurance policy into a permanent life insurance policy of some sort, whether that be a universal life policy, a whole life policy, without having to go through the underwriting process again. So for example, I'm 29 years old, and let's say I took out a 20-year term policy today, but in 19 years and 364 days, I decided, hey, I need insurance past tomorrow. This convertibility option would allow me to have the ability to convert that policy into a permanent type of life insurance without going through underwriting. So no matter if I put on 500 pounds in the next 19 years, if I was diagnosed with 7 types of cancer, if I was in 13 car accidents, it doesn't matter. If the policy is written with a convertibility rider that will allow me to convert it up until the last day of the policy, on the 364th day of the last year of the policy, I could convert that without going through underwriting with as many health issues as I could possibly have, and the insurance company would have to allow it. Now, don't get me wrong, it does come with an additional cost. However, that cost is only based on your age at the time of your conversion. So, if you took that policy out when you were in your mid-20s and you were in great shape, 3% body fat, yada, 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 but then in 19 years and 364 days, you weighed 800 pounds, you had a bunch of different illnesses, etc., they are still going to honor the initial rating that you had. Even let's just say you took it out in your mid-20s and you didn't smoke, and then 19 years and 364 days later, you started smoking, they would continue to rate you as a non-smoker. The only thing that changes when you convert into that new policy is your age. So yes, it will come with increased cost, but it will allow you to have permanent protection moving forward. So that is the biggest component to it, is the ability to get insurance down the road without having to get underwritten, without having to worry about any changes in health, to have the ability to get permanent life insurance without worrying about the cost being through the roof or you not getting approved. Okay, so if we kind of look at this as an entire scenario and how it could play out for somebody who's in a younger generation, let's look at it like this. Let's take somebody who, say, is 25 years old. They're just getting out and getting started in their career. They're starting a family. They have a spouse, and maybe they're expecting their first child. And they take out that life insurance policy. They take out a term life insurance policy because with where they're at in their life, it is the most affordable policy. But being a smart consumer, they want to have something there to protect their family should they no longer be around tomorrow. So they opt for a term life insurance policy that is the most cost-effective thing that they can find at the time that provides the right amount of protection for them. Now let's fast forward 5 years down the road, and that same person who took out that policy now has had a couple of promotions. They're doing better. Their household income has increased, and they have got a little bit more disposable income. And they decide, hey, this term policy, we're only 5 years into it, but I know that in 15 years, I'm still going to want to have insurance in place because my child's going to be maybe only 20 years old, or they had multiple children who aren't even going to be 18 years old or anywhere near that just yet. I want this policy to be permanent. At that point in time, at any point in time, they can decide, hey, I want to convert some or all of that term policy into a permanent product, which will then grow cash value, have flexible payment options, and more importantly, will be there for as long as they need it, so long as they keep paying the premiums for it. Alternatively, let's say they wanted to go and wait 10 years, and at 10 years, there were health changes and everything like that. There was a really bad diagnosis, and this person is thinking, hey, I may not live past my 50s or 60s. I better lock something in now. Normally, if that person hadn't taken out life insurance initially, they wouldn't be able to get approved for anything. But because they did, and they had a convertibility option, they were able to convert it, lock it in, so that down the road, after their term insurance would have expired, they would be able to continue to have permanent coverage. So there's a couple of things to keep track of here. I mean, obviously, the most important is to know that you're buying a term insurance policy from a carrier that offers you conversion options. And more importantly, to know when those conversion options run out. Some carriers will cap them and say that you can only convert for the first 10 years, first 15 years, whatever it may be. And also that you can only convert up into a certain age, whether it be 70 or 75 years old. Okay? And that's another reason it's so important to know what carrier you're getting it from. If you get online quotes from these fly-by-night companies, the odds are they don't offer a product for you to convert into. So it's something to think about if you're younger and thinking about life insurance for the first time, to think, hey, there's nothing wrong with going with the more cost-effective option, But what does that look like for me 10, 15, 20 years down the road? And does it provide the flexibility I may not know I'm going to need at that point? Okay, so to put a bow on this, I really just wanted to highlight this because I see so many people with term policies and I'm a huge advocate for them when they make sense. But it is important to know this very, very helpful conversion rider that can help you extend the life of your insurance policy no matter what condition your health is in. So next time you're considering life insurance, or if you're in the process now, make sure if term is the route that you're going to go, that you have something that leaves an outlet for you down the road to have some sort of permanent protection, no matter how old you've become or no matter what kind of changes you may have had to your health. That is the most important thing to think about. And if you're worried about not having the right product there, maybe just consider something permanent, but at least term gets your foot in the door and it gives you the ability to consider those options down the road. That's it for today. Thanks again for watching. Be sure to like and subscribe.